I'm Caroline Hyde from London. In for Emily Chang, this is Bloomberg Technology. Coming up, tensions escalate across the Korean peninsula. Meanwhile, President Trump is meeting with his advisors after tweeting military action is locked and loaded. We'll explore every angle to this global crisis. Plus, Bitcoin's hot streak roars on, helping push the cryptocurrency market to an all-time high. Could tensions on the Korean peninsula be partly responsible for its winnings run? We'll look into why this volatile asset is being considered a safe haven. And validating their valuation. The tech startup climate has entered record territory, but how long will investor appetite for riskier startups continue? We analyze the data. First to our lead, President Trump is doubling down on his threat towards North Korea. Speaking for Bedminster, New Jersey, the president said North Korea will regret any action it takes against the U.S. or its allies.
And if he utters one threat in the form of an overt threat, which, by the way, he has been uttering for years and his family has been uttering for years, or if he does anything with respect to Guam, or any place else that's an American territory or an American ally, he will truly regret it, and he will regret it fast.
Now, this comes after President Trump's earlier tweet saying the U.S. military's plan to deal with North Korea are, quote, locked and loaded. Now, this hour, the president is expected to speak after his meeting with U.S. Secretary of State Rex Tillerson and U.S. Ambassador to the UN, Nikki Haley. We'll bring you the president's remarks once he steps to that very podium you see now. But first, joining me from Washington is Bloomberg national security reporter Bill Ferries. Bill, what are we expecting to come from the meeting with Nikki Haley and Rex Tillerson? Diplomacy behind the scenes?
I think, yeah, we may hear a little bit about whether there's any back-channel talks or any plans for the UN Security Council to maybe take up some more consideration of tougher sanctions in the days or weeks ahead. But right now, you know, I think it was literally just a week ago that the Security Council passed $1 billion in sanctions against North Korea. I think a lot of people have been surprised by the tone the debate between U.S. and North Korea has taken this week, and they'd like to give sanctions a little bit more of a chance to take a bite.
Talk to us about really what's at risk here and how realistic it is that we could see any sort of escalation, and particularly in not just words but deeds, because Sergei Lavrov, the Russian foreign minister, saying the risks are very high of a war between the U.S. and North Korea. Really, is it imminent?
You know, I think there's a lot of things a lot of signs that we would look for if a major conflict were just about to happen. And frankly, we just don't see that taking place right now. We just put out a story on Bloomberg.com about this. But some things, you know, in terms of deployments of additional naval forces or bombers to Guam and the Pacific, those kind of things haven't taken place yet. Personnel, U.S. personnel, families of diplomats and the military who are stationed in South Korea. Normally, you would try to get some of those people out, either order them out or give them an option. None of that is taking place. On the North Korean side, they would be undertaking some civil defense measures, practicing getting the elite out of Pyongyang. So a lot of those kind of signs that we would expect if a major conflict were imminent just aren't on the table at this point.
Now, I know we've become slightly numb to the fact that Donald Trump takes to Twitter to announce a lot of things, but it is quite shocking that it is being used in this means. And talk to us about perhaps the Democrats' reaction, because they are worried about perhaps the flare-up in tensions, and notably they're sort of trying to remind many of the constitutional requirements here of any preemptive strike in North Korea.
Sure. A couple things there. I mean, everyone has long grown used to over-the-top rhetoric from the North Koreans. We've never seen the U.S. respond in kind over more than 20 years of difficult relations between the two countries. Democrats are saying that Donald Trump is effectively drawing his own red line in the sand that he may or may not be willing to enforce, or if he does enforce, could lead to a real nuclear catastrophe. So they're actually pointing to the same kind of criticism Trump had of President Obama when he failed to attack the Syrian regime after their use of chemical weapons. Democrats are saying now Trump is drawing a red line over North Korea, and we don't think he's ready to enforce it.
Will Ferry is our national security reporter from Bloomberg News. Thank you very much indeed. And of course, we will be bringing you that speech from Donald Trump as and when he finishes his meeting, of course, with Rex Tillerson and UN Ambassador Nikki Haley. We'll be going straight back to Redminster, New Jersey for you. Now, from geopolitics to another area where Trump has had an impact. Of course, we're talking the tech sector. The number of interview requests from US companies to foreign tech workers dropped by 60% between the second and fourth quarter of 2016 amid the presidential campaign. That's according to data released by Hired. It's a job site that matches employers with candidates. Now, the drop in interest indicates that US companies are thinking twice about hiring foreign tech workers amid uncertainty about immigration policies from the Trump administration. Joining us now to discuss is my guest co-host for the hour. It is Russ Shaw, founder of Tech London Advocates, which aims to support London technology startups in finding new investment, new talent. Very well that you do it too, Russ, and welcome.
Thank you.
What amazing statistics we seem to be having. Not only was it 60% back in the second half of 2016, but even the second quarter of 2017, we're still seeing a fall off in US companies willing to interview tech talent from abroad.
And I think we're going to see that drop even further with the announcement that came out 2 weeks ago that further immigration restrictions are going to be put in place. And I think the number is going to be reduced by half over the next few years. So this trend is going to continue. I think the tech industry in the US is probably pulling their hair out. They must be pulling their hair out because there already was a scarcity of really good talent. This is really compounding the problem.
And what does it mean? Do we start to see potentially other hubs benefit, maybe here in Europe even?
Yes. Well, I think a couple of things. I think one of the immediate beneficiaries will be Canada. Canada has a very friendly immigration policy, especially towards entrepreneurs. I think we'll see Europe, and in particular the UK, benefit. I know when we surveyed Tech London Advocates just a couple of months ago, nearly 60% said, Trump's policies on immigration in the US will be favorable to UK tech. So this will have global ramifications.
UK tech, though, we're facing the Brexit concerns, immigration issues, all of our own. Are you hearing from the entrepreneurs that you speak to in London that they're struggling to get EU workers into this country as well?
Yes, we're seeing something similar happen here. And so the message to the government is, look, we're dealing with Brexit. That's reducing the number of job applicants. People here, EU nationals, don't feel very welcome at the moment. We don't want to lose them, so let's sort out the EU nationals that are here. And we're pushing hard and campaigning hard to say, we need an immigration rethink. Let's get third-party sponsorship of visas. Let's introduce a Tier 5 tech visa. And initial indications are very receptive. We'll see if it actually happens, but we'll be pushing hard for that because the government knows it needs to address the situation here, and they also see this opportunity potentially from the US as well.
What's interesting is the US tech giants, the likes of Google, Amazon, they're doing a lot of hiring here. Still, they're remaining committed.
They are remaining committed. A lot of investment going in. Google HQ has just been formally approved. So we're seeing that commitment double down. I think that message is also reverberating with policymakers in the Home Office to say, okay, let's make sure that we're prepared with the right level of talent. And let's not forget the homegrown talent. The Department for Digital Culture, Media and Sport, DCMS, just launched a digital skills partnership. So there's a two-pronged approach. Let's get immigration policy right. Let's invest in homegrown talent.
Now, I can't go without having seen some of the turbulence that we've seen on the public markets. You're a man who sat on the board of some Dialog Semiconductor, one of the big chip makers in Germany, for example. I'm looking at, if I go into my Bloomberg, #BTV624. This is a great chart that just shows you how much we've seen the sell-off, but globally. In the blue line, you're seeing how US tech indices have performed since the beginning of the year. Well, actually, since Donald Trump's own inauguration, we've seen Asia Tech Index all start to fall off. European tech's also low. But I just wanted to go back to Donald Trump's effect, because yes, we've seen a bit of a sell-off in recent weeks, but Donald Trump hasn't really stopped the bullish run in public tech stocks. Why do you think that hasn't been the case?
Well, I think if you look at the overall markets, you know, the whole emphasis on deregulation, on cutting red tape, that is very much permeating his administration and his cabinet. So even though he takes up a lot of volume on media, at the same time, there are actions happening behind the scenes. And I think ultimately the technology sector in terms of stock valuations have been benefiting from that. I think the real question is, how long is this going to continue? Yeah. We've seen the markets rise and rise and rise. Unemployment is at record lows. Yeah. There's going to be a point where this is going to start to change. Is that within the next couple of months, or is it the next couple of years? We're not quite sure. But I think there's a sense that valuations are very high, and can they really stay at those levels? We're
going to be talking about private company valuations a little bit later as well, Russ. Great to have you with us. Tech London Advocates founder Russ Shaw is going to be sticking with me. Now, the battle for control of the boardroom at Uber continues. 3 investors in Uber sent a letter to Benchmark Capital, stating a lawsuit against co-founder Travis Kalanick was designed to, quote, hold the company hostage. The investors also asked Benchmark to step down from the board itself. The investors are Sherpa Capital's Shervin Peshava, Ukipia Companies Ron Burkle and Maverick's Adam Lieber. Now, to be clear, you don't hold seats on the board, or they don't hold seats on the board or a majority of the company's stock. But in the letter, they said they're seeking other shareholders to add their signatures. Now, coming up, Bitcoin is bigger than ever as it hits a new record high. Next, we'll discuss the efforts to make cryptocurrencies more mainstream among traditional and institutional investors. This is Bloomberg. Now, Bitcoin's performance shows no signs of letting up this week. Take a look inside my terminal. Type in #BTV1861 if you have a terminal to handle it, and you'll see the digital currency reached another record high Friday. That's the line in purple. After weathering, remember that split that occurred that was threatening to jeopardize its growing mainstream interest? Now, some are speculating it could be a haven amid rising geopolitical tensions. Meanwhile, the total value of all cryptocurrencies set a new all-time high today, rising above $126 billion for the first time in history. That's according to data from CoinMarketCap. Here to discuss the growing interest in the market, we're still joined by Russ Shaw of Tech London Advocates. Fascinating moves that we're seeing. What's so interesting is also that you're seeing the South Korean won really being one of the major currencies being at the moment traded versus Ethereum, which is the #2 cryptocurrency. Yeah. Could Bitcoin, could Ethereum, digital currencies, be the new haven of choice?
Well, I think it's going to take some time to get there, but I think every time we see episodes like this, it awakens people's interest in cryptocurrencies. So with what's going on in North Korea this week, what I find interesting is the dollar has stepped back. Normally, the dollar is a safe haven currency. Not so. Therefore, gold is doing better, but cryptocurrencies and Bitcoin are doing really well. And so I think as investors look to diversify and move into digital assets, Bitcoin is going to benefit.
There is, though, still some nervousness. Mm-hmm. There is a lack of liquidity.
Yes.
There are exchanges raising money, the likes of Coinbase just raised $100 million. But still, you're not seeing the institutional players quite get in. They're not embracing GDAX that Coinbase has quite as quickly as perhaps they might wish. Yes. What's the tentativeness? What's the cautiousness here?
Well, I guess it's a bit of a chicken and an egg. And you want those institutional investors to start embracing it. But many of them are still worried about security. They're worried about, as you say, the lack of liquidity. The exchanges are very fragmented. And so there's kind of a discussion that's saying, do we need to centralize the exchanges and have a larger exchange whereby the liquidity issue starts to disappear? And then when I think you see something like that happen, many more institutional investors will start to pile in, and it will keep going. So, but we have to remember, it's still very early days. This is a relatively new concept in currency. Most people are on the sidelines. You've probably got your more risk-aggressive investors looking at this. But slowly, steadily, this is going to become more mainstream as those issues get resolved.
But are the banks threatened? Because by its very nature, digital currencies want to strip away the middlemen, want to strip away the need for clearing houses, and then you've got banks and institutions saying we won't do it unless there is a clearing house.
Yes, it's tricky, but that's the classic behavior that we've seen with banks all along. If you look at the whole fintech sector and the success of fintech, they haven't embraced disruption. disruption. They've gone in the other direction. So I think if they're smart, they're going to say, let's really embrace this. And I think some of them are. They're investing in blockchain capability. Yeah. So they're trying to get in and understand it, get behind some of these startups to see, is blockchain really going to be a part of this future? And therefore, is there an opportunity for them to get more deeply involved? So my view is they will start to embrace this much more.
Certainly a lot of them have been working with Ripple, which is, I think, the number 3 cryptocurrency. What about the hub that wins? Because we're sat here in a financial services hub that is London, but Zug over in Switzerland is calling itself, what is it, Crypto Valley. You've also got New York, where you've just been in on the scene. Where wins in terms of fintech?
Well, I think we will see multiple hubs. I do think London and New York will do very well from this because you have a lot of talent that's already here. Obviously, the Valley will do well. I think if you look at China, China's investing in this very heavily. There's a lot of Bitcoin mining that's going on in China. So you will have pockets of expertise around the world. I don't know if there's going to be one center, but there may be 6 to 8 centers. And I think London and New York will be those centers.
Where do you get excited about in all this? I mean, are you someone who dabbles within the digital currency space? Is it something that you've been hearing generally more people start to become accepting of and wanting to know more?
Yes. I've gone from shunning it to kind of saying, I think I should be trying this and getting in and at least putting a little bit into it to see and understand how does it work.
How easy is it to do that?
Well, I don't think it's that straightforward. I mean, you have to have a Bitcoin wallet. So companies like Coinbase, I think, are doing well by setting that up and trying to make it easy for punters like me to get more involved with it. But I think there is a massive effort underway to educate people about this, how it works, what kind of investment profile do you have, and if you are willing to take some risks and watch the volatility in the price, then this is your gig. Over the next few years, as that settles down, I think more people like me will take it seriously and say, look, I might take a small portion of my portfolio and put it into Bitcoin.
Fascinating, and see how the rest of them all fare. Russ Shaw, Tech London Advocates, sticking with me, I'm pleased to say. Now coming up, more details on Tesla's big bond deal, which had better than expected interest from investors. This is Bloomberg. Now, Amazon has hired banks to arrange a series of fixed income investor calls. Now, that's as the e-commerce giant looks at longer-term financing for its planned $13.7 billion takeover of Whole Foods. That's according to a person familiar with knowledge of the matter. Now, Bank of America, Goldman Sachs and JP Morgan will lead the discussions starting Monday. The online retailer has previously received a bridge loan from banks to temporarily finance its planned acquisition of the supermarket chain. Sticking with debt, and Tesla boosted its debut bond deal to $1.8 billion from an initial $1.5 billion. The company turned to the debt market to finance production of the Model 3, with CEO Elon Musk meeting prospective bond buyers earlier this week and reportedly putting on the charm offensive. Here to discuss what the deal could mean for the company, we're joined by Bloomberg News reporter Dana Hull, who covers Tesla. And this is fascinating. While the high-yield debt market has had perhaps a bit of a shaky week, we've seen demand pour in for this high-yield bond, so much to the extent that actually they didn't have to pay too much of a premium and actually scaled it higher. So the deal went well.
Yeah, I mean, the deal was upsized, which is great news for Tesla, and they need cash as they ramp up the Model 3 and ramp up the Gigafactory in Nevada and are continuing to expand their sales and service operations. So, they went to the bond market, and the bond market responded quite in kind.
Yeah, and how important is this? Because they've previously gone to the equity markets, and of course that means dilution, that means perhaps a slight bristling of your investor base. This is just really widening their capital market access now.
Yeah, I think it was a really interesting move. I think, your top shareholders were probably getting a little tired of being diluted. Elon himself, of course, is the top shareholder in Tesla, and it's always good to have a sort of diverse base of cash when you need it. I think the timing is really interesting. It's been an interesting summer for the bond market, and this sort of gives Tesla another cash cushion as they continue to ramp. I think what I'm curious about is, what do they do the next time they need cash? Will they go, is this sort of a one-time thing, or are they going to continue to go back, or is it back to equity the next time?
Yeah, clearly the demand is there for the high-yield debt. But talk to us about how the ramp is going. They've got some big, hefty lines to meet, it would seem, if they're going to get the production out when they need it for the Model 3.
Yeah, I mean, so far all we know is that they turned over roughly 30 cars to employees, and they made about 20 others that, you know, we saw at the big launch event last month. But when the next cars come out, I mean, everyone is waiting to see whether they're really going to hit this run rate, which is supposed to be 5,000 cars a week by December. So that's a very steep production ramp. There's a lot of validation testing that still needs to go on. And while, you know, Musk apparently had a blue Model 3 with him in New York this week, you know, you're not really seeing them driving around on the roads quite yet. So it's going to be a while before we really see the cars. But I think the reason why Tesla did this now is that the early reviews of the vehicle have been very positive, and, you know, get the money while the buzz is still very strong.
Definitely ride it while it's high. Bloomberg's Dana Hull, great to have you. Thank you very much for your reporting as ever. Now next, the tech startup Climate hits a new record. Investor cash is flooding in, but can it last? We speak to one professor who's calling for caution. And if you like Bloomberg News, check us out on the radio, why don't you? You can listen on the Bloomberg radio app, Bloomberg.com, and in the US on Sirius XM. This is Bloomberg.
I'm Mark Crumpton in New York. You're watching Bloomberg Technology. Let's begin with a check of first word news. President Trump is not backing down in the war of words with North Korea. On Friday, he doubled down on his warnings to Kim Jong-un.
And if he utters one threat in the form of an overt threat, which, by the way, he has been uttering for years, and his family has been uttering for years, or if he does anything with respect to Guam, or any place else that's an American territory or an American ally, he will truly regret it, and he will regret it fast.
The president says North Korea has gotten a pass from former administrations for misbehaving in the past. He added millions of Americans support his words because the U.S. finally has a president who sticks up for the nation. The Trump administration is quietly engaged in back-channel diplomacy with North Korea, despite the escalating rhetoric. The Associated Press reports both sides have been addressing Americans imprisoned in North Korea, as well as deteriorating relations between Washington and Pyongyang. Despite reported differences with President Trump, Australian Prime Minister Malcolm Turnbull made it clear where he stands in the crisis with North Korea.
We stand shoulder to shoulder with the United States. The ANZUS Treaty means that if America is attacked, we will come to their aid. If Australia is attacked, the Americans will come to our aid. We are joined at the hip. The American alliance is the bedrock of our national security.
Meantime, the U.S. and South Korea plan to move ahead with large-scale sea, land, and air exercises this month. That's in spite of the deteriorating situation with North Korea, which says the exercises are a rehearsal for war. The annual joint exercises now fall during the timeline when Pyongyang says it will be ready to launch missiles into Guam. Japan has started deploying land-based Patriot interceptors in response to North Korea's threat to send ballistic missiles over its airspace into Guam. It said Friday the surface-to-air interceptors are being deployed at 4 locations, including Hiroshima. Kenya's Electoral Commission has declared incumbent Uhuru Kenyatta the winner of the presidential election. The opposition, led by candidate Raila Odinga, has rejected the results. International observers are urging all losing sides to resolve any disputes in court. Venezuela's President Nicolas Maduro wants either a face-to-face meeting or a phone conversation with President Trump. Maduro Friday addressed members of the 545-member Constitutional Assembly, which now has broad powers to rewrite the nation's constitution. Global news 24 hours a day, powered by more than 2,700 journalists and analysts around the world. I'm Mark Crumpton. This is Bloomberg.
Welcome back. And in breaking news, a Bloomberg scoop for you. Some White House and Republican officials are said to be exploring the idea of naming West Virginia Democratic Senator Joe Manchin to run the Energy Department. That's according to 4 people familiar with the discussions. Now, the move could boost President Donald Trump's stalled legislative agenda. Joining me to discuss is Kevin Cirilli, our chief Washington correspondent, who broke this story. Kevin, talk to me as a Brit, as the global audience, as to why this announcement matters. How does this help the legislative agenda?
Well, earlier today, I spoke with several sources who tell me that Senator Joe Manchin, a moderate Democrat from West Virginia who is up for a tough re-election fight in the 2018 midterm elections, has emerged as someone who could be a potential contender to lead the Department of Energy. Now, of course, that would involve some switches and changes within the president's cabinet. Now, what would have to happen is that Secretary of Energy currently is Rick Perry. He would have to go to the Department of Homeland Security, which has left open a vacant seat ever since General Kelly, the previous owner of that spot, so to speak, went on to become the president's chief of staff. Now, should Senator Manchin, should this all go down, it would allow there to be a new open seat in the Senate, which arguably would give Republicans the opportunity to pick up a spot in the Senate, just bringing them one vote closer to get key legislative items passed, such as the Affordable Care Act. Now, I went right to Senator Manchin's office when I was speaking to my sources, and I asked his spokesman, Jonathan Cott, about what would happen and whether or not Senator Manchin would accept the position if he was offered it. But when I asked them this, the statement that I got was, well, I'll let you decide. The quote, Senator Manchin has not had any recent conversations with the administration about the Secretary of Energy position. He remains committed to serving the people of West Virginia. So there didn't answer my question about whether or not he'd accept the position. I can tell you Senator Manchin was under consideration for this position back during the Trump transition period. But according to my sources, he walked away from the deal because he wasn't guaranteed the opportunity to bring over his own staff.
Great scoop, great hustling as well, going up and asking, and who knows, a politician dodging a question. Who knew it, Kevin? But talk to us. This has been, I mean, such an incredibly busy time for you as Washington correspondent as well. I mean, talk to us about the latest when it comes to North Korea as well and the tensions building between the U.S. there.
Well, the tensions have absolutely been building. There are several people in Washington, including in the Republican Party, who are a bit apprehensive about the fiery rhetoric, so to speak, coming from President Trump. There are others within the Trump administration who really view this as a political asset, that unpredictability in the geopolitical space, really trying to press China to address North Korea, because that's where the comments coming from people like Commerce Secretary Wilbur Ross really could matter. If the Chinese don't play ball to address this 33-year-old dictator, Kim Jong-un, of North Korea, with his brazen attempts to have a nuclear weapons program, that really could pose more geopolitical risk. That said, the president today speaking publicly saying that he does not think that North Korea should at all mess with Guam with their missile range or missile launches. And I think that as this continues to develop, you've noticed what we've seen on the domestic policy front emerge on the foreign policy front, where the president is using fiery rhetoric while his top lieutenants, his top cabinet officials are being a bit more constrained in their rhetoric. And market reaction, yes, there's been an increase in market volatility predictions, but that said, while markets have dipped somewhat, they have not dipped significantly so far on the developments in North Korea. People are apprehensive about it, though.
Yeah, certainly we saw a bit of a stabilization in the fear gauges today and in the equity markets. Brilliant reporting, great scoop. Thank you for joining us. Bloomberg's Kevin Cirilli there. Now, it's a good time to be a VC-backed startup in America. The Bloomberg US Startup Barometer, which measures the health of the business environment for private tech firms in the US, well, it's hit a record high, up 44% from a year ago. But a new study out from Stanford University and the University of British Columbia is sounding the alarm about a certain set of startups. The unicorns. Unicorns are startups worth $1 billion or more, but the study says that the average unicorn is overvalued by, get this, 50%. Joining me now to discuss this is one of the authors of the study. It is Professor Ilya Strebulaev of Stanford University's Graduate School of Business. Great piece of academic work here, and talk to us first of all about the unicorns that are overvalued. So when I'm excitedly reporting of Uber's valuation, almost $70 billion, I'm wrong, am I?
Well, first of all, thank you for having me on the program. Well, we do show that all the unicorns are overvalued relative to the reference point, to the reported valuations that you and everybody else uses. And the reason behind that is that it's easy to explain. When people use public companies as a reference point, public companies typically have only one class of shares, common shares. So most people assume that these unicorns have only one class of shares. In fact, Uber has 12 classes of shares. And when Uber raised its valuation to about $70 billion, the 12th class of shares, the latest round of investors, got some additional preferences, some additional rights relative to everybody else, including common shares. And what the valuation that people use assumes is that every single share that Uber or other unicorns issued have exactly the same rights, have exactly the same preferences than this last class of shares. So what basically happening is that if the last class of shares has more rights, downside protection, upside benefits that common shares and other investors don't have, then equating all these prices just does not make sense.
So not all shareholders are created equal, not all shares are created equal in these private companies. How can you inform who should be informed? Who's most vulnerable to perhaps this overzealous valuation of these companies?
You're absolutely right. We find that on average, a unicorn has 8 different classes of shares, and all of these classes typically have different rights, different cash flow rights, and different control rights. I think that first of all, employees of this company should really be aware that the reference prices they may use to think about their compensation that mostly comes in options is not the right one. It just does make sense to use these prices to think about their potential wealth. Investors in this company should be aware that the reported valuation that is used by Ubers and other unicorns is not the fair value. Again, it's about 50% less. But also, I believe that these companies are so important now for the US and global economy, and it is such an important asset class these days. So I think the regulators should find it more and more interesting to look into the difference between the fair values and the reported valuations.
I feel bad that we've just been referencing Uber here. I mean, of course, how broad a pool of privately held unicorns were you looking at, and how prevalent is this? Is this every single one is overvalued?
We looked at the sample of 116 VC-backed companies. So all of them are unicorns. All of them have reported valuation over $1 billion, and all of them are overvalued. Let me give you an example that recently went public. Blue Apron, that is a unicorn that last raised its private round about 2 years ago at a valuation of about $2.2 billion. That was the reported valuation. We find that the fair value at the time was 37. That was at the time overvalued by 37%. So that the fair value at the time of Blue Apron was about $1.6 billion. Again, because of the additional rights that these last investors got. Now, Blue Apron recently went public about 5-6 weeks ago, and its IPO valuation after the IPO proceeds was about $1.6 billion, which is about 25% below the valuation, the reported valuation it got 2 years ago, and actually it neatly coincides with our value estimate that our valuation framework produces. This is just another example.
And now its valuation is just $973 million, looking at the Bloomberg. Stanford University's Ilya Strebulaev, thank you very much indeed for joining us. Now, Apple and the Irish government are said to be nearing a deal that would protect the government from losses while it holds on to nearly $17 billion of Apple's cash. That's according to two people familiar with the matter. Now, the money was set aside after the European Union told Apple to pay nearly $15 billion in back taxes. The EU said Apple received unfair tax deals from the Irish government. The cash will be held in escrow by the Irish government, pending an appeal that could take as long as 5 years. Now, coming up, SoundCloud just scored a major lifeline. We'll check out the details of that $170 million investment and the major strings attached to that influx of cash. That's next. This is Bloomberg. Hewlett-Packard Enterprise is heading to the stars with the help of SpaceX. Led by Elon Musk, the space technology company will carry an HPE supercomputer to the International Space Station. The launch is set for August 14th and aims to test how computers could function in space. HPE has said Friday that the launch is part of a joint experiment with NASA that will track the supercomputer's performance during a year in space. Now, back down to earth, and SoundCloud is getting a financial boost from new investors. Rain Group and Singapore's Temasek Holdings have agreed to pump $170 million into the popular but financially strapped digital music service. Though that lifeline has come with strings attached. The Berlin-based digital music service will replace its CEO and shift its business strategy to focus more on selling tools for artists and other content creators. Joining me now to discuss is Bloomberg News reporter Lucas Shaw out of Los Angeles. And still with us is my guest co-host, Tech London Advocates founder Russ Shaw. No relation, we have to admit. Lucas, first of all, great scoop, great piece of research. And what are we therefore seeing? The valuation came down hugely, didn't it, in this new round?
Yeah, you know, SoundCloud several years ago was one of the hottest companies in digital media, especially in music. You know, a huge number of people who use it every day, every month, beloved by the artist community, many of whom expressed dismay over the past couple months because there had been some thought that the company could disappear altogether. And what ended up happening was they accepted a deal where they get enough money to continue operations and try to figure out what the business model is going to be. You know, SoundCloud has had a long audience for a long time, but never figured out how to make any money from it. They're now going to try this more tools-based approach. It doesn't sound like a huge, a huge potential business, but it's enough to keep things going. And it seems like they didn't want to do an outright sale and have a brand new owner that would take full control. And so they opted for this kind of in-between deal where they sell large chunks to two different entities.
I mean, Russ, I remember when we heard SoundCloud was trying to do a deal with Spotify and it wanted $1 billion, and now it's worth far less. I mean, what does this say about the European tech scene? Does it worry you at all, or is it just a one-off?
Well, I think it certainly says something about SoundCloud, that their model simply just wasn't working. Going up against Spotify, going up against Apple, and competing head-to-head, even though they have some really loyal users who absolutely love the service, the model is flawed, and they just couldn't withstand the pressures from some of the other bigger guys. So I think they're right to shift the model. The new CEO that they're bringing in, Kerry Trainor, has a background in terms of how you use tools, how you help music and content creators get things going in the right direction when it goes onto digital platforms. That will be a good service. And Kerry came from Vimeo, where he did just that. So he knows this world really well. But to Lucas's point, is it going to be big enough to really drive SoundCloud's future? I think that verdict is out.
Yeah, I mean, Lucas, we've got to be questioning whether they'll ever be heading the heady heights of unicorn status anytime soon. Talk to us about whether the pain is over in terms of staff cuts as well. They shed about 40% of their employee base. So those sorts of cuts and dramatic shifts over, do you think?
For the time being, they said as much. You know, after those cuts, they centralized their business really in Berlin and New York. Carey, the new CEO, is based in New York. One question I didn't get a chance to ask him yesterday was whether he would be relocating to Berlin. My sense is that he'd stay in New York. But one of the most interesting moments, my colleague Adam Satariano and I interviewed the co-founder Alex, Carey, the new CEO, and some of the new investors yesterday. And we asked about morale and how, this sense that the company's best days were behind it, people who were very upset that there had been all these cuts and maybe there had been too much of a talent drain. And they pushed back rather forcefully. They were insistent that as soon as people found out that there was this new direction and that SoundCloud had enough money to keep going, that would stop and that people would be excited to work there again. Now, whether that happens or not, I can't say. But that suggests to me that for now, they are happy with their current size. They have a plan. And of course, we'll wait and see what happens.
And certainly some of the musicians that love it, I'm sure, will be breathing a sigh of relief. Great reporting. Thank you very much indeed, Bloomberg News reporter Lucas Shaw joining us, and Tech London Advocates founder Russ Shaw. He's going to be sticking with me. Now, coming up, we'll discuss one of the biggest stock stories of the week. Shares of Snap took a hit this week, now trading at its lowest level ever. This is Bloomberg. Now to Snap. Shares continue to sink, hitting its lowest price yet since its March IPO. That's after the company reported another quarter of slowing user growth. Several analysts also cut price targets after the disappointing earnings results. We're once again joined by Russ Shaw, founder of Tech London Advocates. So I'm looking at the Bloomberg, I'm looking at analyst recommendations, ANR, if you put it in, and we have got just one person going from a buy to a hold. That was Manes Crespi-Hart. Okay. But overall, we've got price targets being cut, as you see in the white line, and the price just turns sour. What is it with Snap? Is it just the competition coming from Facebook, do you think?
I think competition from Facebook is key, obviously with Instagram. I think, Snap has to look at its model and say, can we sustain this and going head to head? Now, it has some good things working in its favor. If you look at the average user per day, 40 minutes per day on average for Snap, versus 20 minutes per day for Facebook. So the level of engagement that Snap has is far higher, also against a younger demographic, which advertisers love. So they've got some things going. The revenue numbers, I thought, look pretty good. Yeah. But can this model be sustained when Facebook and Instagram have just replicated what Snap has done? So Snap is going to have to think beyond what it currently does to say, how do we do things differently? And they're a public company now, so it's going to be under that public company gaze that they're going to have to do some things differently. And
I think it's interesting that we're seeing the two hoped of beacons of 2017 in the IPO market. We had one of them being Snap, and of course then Blue Apron came as well. And Blue Apron too, seeing the challenges, not spending so much on marketing, therefore losing some of their customer base, but also many worried about another key big player being Amazon. I mean, what do you do if you're a smaller player? Do they both become M&A targets now? What is this?
Well, I think that's going to be probably the future for both of them over the medium to long term. If they can't change their business models and survive on their own, they're going to have to put themselves up for sale, which is really sad. And I think the bigger issue here is you have these big technology giants, Facebook, Amazon, Google, etc., that are calling a lot of the shots and have the money to go in and say, okay, look at this interesting startup over here. We need to go after them. Either we're going to go directly for them or we're going to acquire a competitor and replicate what they do. So this is an interesting landscape where I think startups, scale-ups, entrepreneurs who look at the big tech companies may start to say, are they really there to help me out, or are they going to undermine my business model over the longer term? And we're not quite at that cusp yet, but I think we're going to see more startup backlash against some of the bigger tech companies. Are they too big to fail?
That's a really interesting point. When you're speaking to all the entrepreneurs that you represent, when you're advocating on their behalf, what is sentiment like at the moment? What is optimism like? I mean, they're meant to be a group that you can't kick down, but...
No, you can't kick down. And, and the entrepreneurs that I meet who have these great visions and ideas, they're so passionate about it. But I think part of it is going to have to be, this is the reality of the world that we're operating in. This is the landscape with these big tech companies that you have to be mindful of. You need to figure out how you keep them close, keep your friends close and your enemies closer, as part of your strategy and figure out, can you really disrupt in such a way that they can't replicate what you're doing, or is it just not of interest to their business model? You know, does Google look at them and say, well, really, that's not core to who we are? Yeah. You know, let's get behind them. So that's part of what I'm hearing on street level, and I think there is some concern that could be growing over time.
Dig those moats.
Dig those moats.
Russ Shaw, wonderful to have you here on a Friday night, founder of Tech London Advocates. A joy to have him joining us in London. And that does it for this edition of Bloomberg Technology. That's all from us here in London. Wishing you a very good weekend. This is Bloomberg.